Hi everyone, this is your host Cem Cetinguc. Welcome to another episode of Good Morning from Turkey. So it's a new year. I hope it started good so far for everyone. Everyone is just well and fine. And I'm hoping, genuinely hoping, that this year will be much better than the year before. Before we begin, if you're a regular, welcome back. But if you're new to our channel, please consider to subscribe to our channel by clicking the subscribe button right here. And also, make sure to like, share, and comment on this video. I would really appreciate that. Also, please make sure to check out paturkey.com for more additional information about the latest developments about Turkish politics, economy, and finance, and much more. So, the year started quite fast in Turkey. The economy is still struggling, but trying to bounce back from the lows that was seen during last year. And in today's episode, we will be talking about the Central Bank of Turkey's policy rate decision, which was declared a couple of days ago, like 2 days ago. As you know, Turkish lira devaluated tremendously during 2020, and it was one of the worst performing currencies throughout the globe. That is the reason why the Turkish economy team was replaced during the last quarter of the previous year. And the new governor of Central Bank and the Ministry of Finance made bold decisions to stabilize the Turkish lira and to battle with rising inflations in the country. After the gradual increase of the policy rates, the dollar-Turkish lira exchange rate went down from 850s, and now it's fluctuating around 740 to 750 range. A couple of days ago, the Central Bank of Turkey had a meeting in regarding to the policy rates, and the decision was made to keep the policy rates at the same level, which is 17% at the moment. So Central Bank of Turkey didn't raise the policy rates further, which was a surprise for a few economists, and also raised questions about the consistency of the monetary policy imposed by the Turkish government. In our previous episodes, we have mentioned that President Recep Tayyip Erdogan have made statements such as high inflation is the result of the high policy rates, and he previously advocated an unorthodox view that rising policy rates will gradually increase the inflation in consumer goods. President Erdogan pressured former finance ministers and the governor of the central bank to lower down policy rates in the past years. However, that strategy didn't go well as planned. And now with the new economy team, central bank and Turkish government are trying to regain investor trust by making statements about how they will be transparent about the monetary policy, and they are very determined about fighting against the inflation rates in Turkey. In the past couple of months, policy rates in Turkey gradually increased from 8% to 17%, even though some economists expected that Central Bank of Turkey to raise policy rates to around 50 to 100 basis points. The Central Bank of Turkey didn't make any changes, and CBRT kept the key policy rate unchanged at the 17% range in the first MPC meeting of the year. So what does that mean? Why Central Bank of Turkey didn't raise the policy rates further in order to have a strictly tightened monetary policy, at least for the short term? In this particular time, it is fair to assume that Central Bank of Turkey is likely pushing a wait-and-see approach for the upcoming months. The Central Bank of Turkey right now is weighing the market and tries to understand the market outlook in order to make necessary changes as the inflation rate and the foreign exchange rate changes. So basically they are trying to go very surgical with the monetary policy changes at the moment. This means that in the near future, the Central Bank of Turkey will face a difficult task. First of all, the bank needs to refrain from a premature rate cut cycle, which might trigger a Turkish lira sell-off and the further depreciation of the currency. But on the other hand, it should not wait for too long to avoid the freezing of the economy. In sum, it needs to initiate a monetary loosening cycle just at the right time and scale, depending on the data flow. If it all goes as planned and the stability of the Turkish lira is maintained, the Central Bank of Turkey may initiate a rate cut cycle, bringing the policy rate to around 13% or even lower by the end of 2021. At this point, it all depends on the performance of the Turkish economy, throughout this year and how the pandemic will play out in the country. As we have previously discussed in our earlier episodes, COVID-19 pandemic had a huge negative impact on Turkish economy, just as any other country in the world except China, of course. And a lot of Turkish businesses had to shut down due to lockdown and other pandemic measures imposed by the government. That situation brought many bankruptcies within. As a pandemic response, Turkish government provided credit loans for most of the businesses throughout banks, but it wasn't enough alone for companies to survive during these tough times. Since there wasn't any generated cash flow during lockdown period, businesses were not able to pay back their credit loans. Therefore, it is fair to say that Turkish economy is in a tough situation at the moment, especially in the winter time where weekend curfews are imposed and all businesses are pretty much closed after 8 p.m. during weekdays. But the status quo might change rapidly due to the pandemic and the initial response of the government. COVID-19 vaccination efforts are increasing as Turkey already vaccinated more than 1 million health workers and start the vaccinations of the elderly that are under higher risk. If we can be able to see a rapid recovery of the economy in 2021 due to the vaccination and the normalization efforts of the global economy, things might go better than expected. Normalization efforts might revitalize Turkish economy, and the Central Bank of Turkey can adjust its monetary policy in terms of policy rates and the fight against the inflation. Therefore, it is fair to say that it will be an interesting year for Turkey, and we all hope that the negative effects of the pandemic will gradually decrease over time. But still, right now, it is far from over. Well, that is all for now, folks. Thank you so much for tuning in. I hope you enjoyed this video. We will be back with more news, but in the meantime, if you would like to get more detailed information about Turkish economy, news, politics, please also make sure to check out paturkey.com. And also, please don't forget to like, share, and make comments on this video below. Thank you so much for listening. Have a wonderful day, stay safe, and I hope you all have a wonderful year. See you next time, and take care.